Hello and welcome to Blockchain Week Day 4. There is no more important question or topic in the blockchain anywhere in the world than where the regulatory perimeter should go. We're going to dive into that question in this session. I'll pass the virtual mic over to Chloe White. She's the Managing Director of Genesis Block, who will lead and introduce our speakers. Take the stage, Chloe.
Thank you so much. I'm really excited to moderate this session today. This is a really important topic for the policy discourse in Australia. And the title of this roundtable is really confusing to people who aren't thinking about policy all the time. What is a regulatory perimeter and what is a safe harbour? Hi, Jack. We've just started the session. So we've got a really wonderful group of people to participate in this discussion today, people who are deep experts across law and policy and practice, people who understand the Australian environment, and also who have looked at international jurisdictions, other regimes where we can learn some lessons from. And I will go around and introduce them as I call on them to speak. But before we get stuck into all of that, I think it is probably appropriate for people who maybe haven't thought about these topics before that we actually explain what is a regulatory perimeter and a safe harbour. And who better to talk us through some definitions than an academic? So I'm going to kick off the session today by picking on you, Chris. So for those who don't know Chris Berg is from the Blockchain Innovation Hub at RMIT down here in Melbourne. It's one of the world's top ranked universities for blockchain. Chris, how are you? Can you please talk to us a little bit about how you see regulatory perimeter and safe harbour at a high level?
Well, asking an academic to do definitions well, I'm going to take 45 minutes, so I hope everybody sits back. Look, there's a lot of different regulatory perimeter models and a lot of different safe harbour models. I think the idea that we're particularly interested in the Australian context is a safe harbour that prevents or protects entrepreneurs and teams and that protects them while they are releasing and developing out product. So one of the challenges that we've had in the crypto space is that because we're operating in a space where the regulation isn't harsh, it's just uncertain, lots of teams have found it really, really difficult to identify, well, what particular regulatory requirements would I have to, or compliance would I have to achieve in order to launch. The regulatory safe harbour provisions, and there, as I say, there are lots of different models there. The regulatory safe harbour provisions would allow teams to develop for a period of time until which there were either clear legislative or regulatory obligations that were placed on them, or until there was a legislative or regulatory model in place on the sector as a whole. I think it's really, I'm sure the rest of my colleagues here will be able to talk about the significance of this, but I think we need to recognize that the reason that we want a regulatory safe harbour is because the regulations, it's not that they're too hard, but they're very unclear how they would apply to this innovative technology.
Thanks for that, Chris. I might pass to Michele then. So Michele Levine is Special Counsel at The Fold Legal. Michele, why do you think it's important for us to have a safe harbour?
I think if Australia wants to be a really competitive market to attract and retain talent in this space, it's really critical that we have the rails in which people know in which they can operate. I think we're at risk of losing really good talent and good projects offshore where there is a bit more certainty. So I think certainty is really key. But I think it creates complexity for regulators and consumers alike. I think if we know how things are regulated and how things need to be treated and done in the market, it creates more certainty for regulators in understanding where the risks are and where the risks aren't, and also for consumers to feel confident that they can actually engage with this product and take it to the level in which they want to engage. So I think it's multifaceted. I think it's also important to also encourage some of the financial institution and the incumbents which have been sitting on the sidelines a little bit and also a quite critical infrastructure for these businesses to be able to launch as well, and giving them the comfort that, you know, you don't have to debank a crypto business, that it is a viable, sustainable business that's appropriately risk managed. And I think they're really important things in building out the ecosystem.
One of the top recommendations that Blockchain Australia made to the Senate inquiry last year was to put a safe harbour in place. And one of the outcomes of that inquiry process has been the subsequent announcement by the government that they are wanting to progress the policy discussion for a new crypto asset regime in Australia. On Monday, Minister Hume, who's the Minister for Financial Services, came and gave a speech at Blockchain Week, announcing some consultation that is now underway. And so on the Treasury website, there's a paper up there on market licensing, and it proposes a definition that would capture some specific types of businesses in crypto in Australia. And we've got a new acronym proposed in this paper. It's called CASPR. I'm going to throw to Mark Bland from Mills Oakley, a law firm. And Mark, you work with a lot of blockchain and crypto asset businesses as part of your role. CASPR, who or what is proposed to be regulated here?
It's reasonably well known. I do want to go to Casper the Friendly Ghost, but it could be a ghost depending on the election and that result later this year. But it's firstly, to understand what it is, it's good to understand why as well. So that what the consultation proposes to do is distinguish between issuers of crypto assets and service providers who facilitate consumer access to them. And it comes from a policy position that the risk of consumer detriment when dealing with crypto asset service providers is relatively high compared with issuers, because it's hard to gauge the quality of the service before acquiring the services. And it's partly come out of some issues with wallets and hacks of wallets. And so wallet providers might be covered by this. Importantly, it won't apply, well, stated in the consultation paper not to apply to decentralized platforms or protocols. So it's centralized service providers. And so it would apply to all secondary service providers who operate as brokers, dealers, or operate a market for crypto assets. Secondary service providers offer custodial services in relation to crypto assets as well. So it's based on a principle of there being harm where people are involved in centralized organizations and focusing on those harms.
I'd like to turn to Brinda. Brinda Paul, you are head of global compliance at Banxa. You're in an interesting position in Banxa. You don't deal directly in the crypto assets, but you're part of the on-off ramp ecosystem. What kind of approach would you like to see taken?
Thanks, Chloe. I think what is interesting is we'd like to see an approach that is balanced. And right now we see that there's a struggle to find the right balance between protecting investors against information asymmetries, safeguarding the financial market, yet at the same time facilitating financial inclusion and promoting innovation. So we want to see more. So when I think about regulations, I don't think of them as issues, I think of them as opportunities. And it's time for us to think out of the box. And in terms of like safe harbor, yes, we want to weed out the fraudsters, but we want to foster safe innovation during the bootstrapping phase. We want to give projects sufficient time to decentralize. And in Australia, I see that we have a real opportunity. We also want to encourage the pursuit of big ideas without the fear of breaking laws. And I feel that, you know, we are uniquely placed. We see what's going on in Europe right now with the MiCA. The MiCA stands for the Market in Crypto Assets Regulation. It's in draft. We see the proposals that they've put forward. We think there's plenty of opportunities to be more innovative. And we still feel that it still kind of favors the incumbent. So yeah, that's my initial input.
Brinda, you've just raised there about some of the initiatives happening in international jurisdictions. And that's certainly something that we looked at closely when we were pulling together the Blockchain Australia submission. Anyone who hasn't looked at it, you can go and see there's a large section in there that summarizes what other countries have done. And one thing that I would note is that, you know, having a safe harbor or some kind of transitional arrangement that helps businesses in this transition is a really common practice in like-minded jurisdictions. We have seen that that's been part of the MiCA legislation that's been progressed in the EU, it's also been done in the UK, it's been done in Canada, it's been done in Singapore. In terms of putting a little bit more meat on the bones here, when we talk about some specific arrangements that we might like to see, I'm going to ask Guy. So Guy Dickinson from BetaCarbon, which is a platform that puts carbon tokens on the blockchain. Guy, what are some specific ideas for the kinds of interim arrangements that Australia could have?
Hi, everyone. Thanks for the chance today, Chloe, as well. Look, for me, I think being an issuer, service provider, going for an AFSL, centralized off-ramp, on-ramp, and, we're touching all these pieces. And I think we've felt it over the last 9 months as much as anyone can. But it hasn't stopped us. And I think the regulation is exactly where it needs to be today, because we wouldn't even be having these conversations if we didn't have the chance. So I like where we've ended up. I feel like if you take the body of that announcement on Monday, the consultation, it kind of sits in the Goldilocks kind of area. But I'll note the juxtaposition between these are your two other options, self-regulation or hard regulation, which clearly is not where we want to go. But for me, to get to Goldilocks, we need to take the self-regulation route. And I think we've been a mature industry in Australia, and that's because we've gone straight to the regulators. We're not hiding in the basement. We're being mature about this. We're telling them we're here. If I look at my own project, I touch 4 regulators. And anyone would just probably beat their head against a wall most of the time, but actually they've all been pretty open and responsive. And I think that says a lot about the industry at large. So I think if I talk about what's important, I think about things that I've written here. When we went through trying to get an AFSL for carbon in the retail space, impossible. I mean, almost impossible to get PI insurance, all the other pieces that come with this. So when we think about what this license looks like, these things need to be considered, and they take time for an industry to come to the party with all these other pieces that form a license. So when we think about what it looks like in juxtaposition to an AFSL, we need to be quite prescriptive around that as an industry. And I think it's the incumbents who are probably fairly well served to talk about that, because a lot of people haven't had an AFSL in their past, and how prescriptive that can be. If I think about the fact that to go for my own AFSL is much harder than to buy one. And I think that says a lot about the fact that there's already room to jump into the industry if you have money. There's already room to perhaps self-insure if you have money. So I'd like to make sure that it fits the startups, it fits that innovation hub. And so that safe harbor for me looks like 2 things. The first one is I've gone through a licensing regime called the FFSP when I was the treasurer at HSBC. That took 2.5 years for them to pull it. So they spent 2.5 years trying to get us to a point where we could be licensed as a foreign provider in Australia. And then they decided it was all too hard and they didn't have enough people to do the licensing. So this is not just about us, actually. A lot of this is about resource that ASIC has, or the resource that the regulator it touches has to prosecute this license. And I think that is much longer than everyone probably realizes at this stage, having gone through processes with regards to Clean Energy Regulator, ASIC, ACCC, all these things, they take a lot of time, and they need to get up to speed and learn too, because we've only been doing this for a couple of years too.
That ties into the points that Brinda was making around the incumbents do have a number of advantages. And one of the comments that I heard from Senator Bragg also on Monday this week was that we need to make sure that the new regime that we transition towards doesn't punish new entrants. And speaking of new entrants, FTX has launched in Australia on Monday and announced that they have obtained an AFSL. Jamie, could you talk to us a bit, just continuing on this thread that Guy has raised around AFSL and navigating the licensing regime? What was it like for FTX to get to this point?
Yeah, thanks, Chloe. And it's good to be here as well and to talk about sort of FTX in Australia now that we are in the market. And so to be clear, I mean, FTX has acquired a number of licenses around the globe in recent months. So we've acquired licenses in USA, Europe, Dubai, and here in Australia as well. But it is a complicated process. It is a very resource intensive process. And I think, you know, FTX, we're quite lucky that we're a fairly large exchange with a lot of resources behind us to do this. And I think, you know, if we move to any new models, sort of, you know, touching on the points that Guy and Brinda were talking about, we do need to ensure that there is that balance, right? So there is that balance around providing some sort of regulatory certainty for players and actors in the market, but not, you know, sort of swinging so hard that it is harder for like new and innovative players to enter into the market, because a lot of these startups, you know, they're not going to have the resources and the backing and the knowledge that perhaps a large exchange like FTX does. And you know, we're less than 3 years old, so we're still sort of going on our own learning journey as we sort of move into these regulated entities around the world. So I think that's an important balance, and I think that's a good point that Bragg made as we sort of develop this new regime in Australia. But for us, it was a fairly long process, and Guy, you're absolutely right. It was faster to obtain an AFSL through acquisition than it was through licensing, and I think, Chloe, this is kind of where this safe harbor concept comes in. And it's quite important that we have in any new regime a good transition or safe harbor period as we move over. You know, it will provide people with some level of certainty that they're working within some sort of framework. Because if the experience from overseas and even from, say, the changes coming out of the Hayne Royal Commission, if that's anything to go by, this will take regulators some time to wrap their head around. And we've seen this, and the Blockchain Australia submission, I think, raised a lot of these case examples around, you know, regulators who have established a regime sort of grappling with how it will be implemented. And I think that's sort of where a safe harbor and a clear transition period will be very important to try to balance out those incumbents in the market, but also ensuring that new players can sort of still get in.
Thank you, Jamie, and forgive me for introducing you post-fact. So Jamie Kennedy is part of the FTX Australia team and has a depth of experience in crypto policy in Australia for a number of years. I want to move to Courtney Fitzsimmons from Mex Digital. Courtney, you are joining us today from Dubai. Thank you so much for being on the call. You've got a real global perspective, and you know, you've seen how this plays out in a few different jurisdictions. Just building on some of you know, Guy and Jamie's comments about going through the licensing process, and you know, Guy was talking as well about educating regulators and that being part of the resource intensivity. Could you share some reflections with us, you know, what you've seen in other jurisdictions? Like Singapore is one that we've talked about a lot in the last year.
Yeah, look, thanks for having me. It's been a different experience than I've worked within regulated markets for going on 16, 17 years. I don't know why I admitted that out loud. And I think that the great thing that we've seen with a lot of regulators is they're engaging in conversations. I think previously we've seen them all too often come out and wield a sword without speaking to industry. So I think what Blockchain Australia has done and the place that it's held at this infancy is going to be absolutely phenomenal for the future of this industry, because we're speaking to regulators colloquially, we're giving them real in-depth, you know, information, that we're removing that Chinese wall between industry and regulators. And I think that that's a big thing for this sector, and it's going to play into the way that the policy rolls out. I think that global regulators that have been notorious for being heavy-handed, which, let's face it, ASIC has been known for as well. That's why it's considered a tier 1 jurisdiction. I think they've kind of been on the front foot because they realize the opportunity, right? I think any regulator that's embraced this sector or has built out at least a pro forma regime clearly wants the investment, and let's face it, it's huge. It's a new era. So I think that any regulator that comes out too heavy-handed is really doing themselves a disservice, because, you know, as a few of the other speakers have touched on, in Australia, it's going to be silly of them to lose this, because not only is this investment, it's going to be the new world, basically. I think that what ASIC is showing good signs of is that when they're engaging with industry, they're starting to realise that this has to be a slow burn approach, talking to the safe harbour. I think they also have to let entities that don't currently work within a regulated regime get the expertise, because it's one thing getting advice for a license or getting, you know, a professional to apply for a license, but having management expertise in working in regulated environments is really going to be a hard thing to grasp, because it's an expertise that is rare and it's highly sought after. So I think that brokers are going to need to get the time, or exchanges or entities are going to need to get the time to place a management team that has both the technical expertise but also the regulatory insight. And I think that's going to be certainly something that, as more and more players enter the market, like FTX and ourselves, that engage with regulators that have worked within regulated environments before, it's going to instill some sort of confidence that we're here to embrace regulation as long as they're fair.
I'm going to turn to Jack Deeb from Mycelium. Mycelium is such an exciting project. And Jack, the work that you've been doing is right on the innovation frontier, DAOs and DeFi. You know, we love all of that kind of thing. In the consultation paper that came out on Monday, they're really clearly communicating in that paper that you know, the target at the moment is to really focus on the on-off ramps. And so that doesn't touch, you know, DeFi or DAOs at this point in time. How does the policy discourse look from your point of view at this time?
Yeah, thanks for the introduction, Chloe. And the policy discourse is really interesting. I think we've seen MiCA and the US with the executive order, and now Australia take quite similar positions in terms of, well, here are the centralised entities or the ports that we can look to and start to put clear structures around what they can do and what they can't do. And I think that the big gap here, or the big next phase of innovation, is going to be around decentralised systems. I think there's going to be a number of areas of law which are going to be put under analysis, quite frankly, the corporations law and tax law, consumer law, and AML/CTF laws as well, in terms of, well, given that we have Bitcoin and given that we have Ethereum, and given that we have all of these variations of Ethereum now, and these systems are being used to transact globally, what does regulation for decentralized systems look like? I think the benefit that Australia has is that it's taken quite an open an open-minded approach to trying to answer that question. I think Treasury consultations, we haven't yet turned to the question directly of, well, how does a decentralized system look within the current regulatory environment? But I think Bragg's recommendation and Treasury's approval of DAOs as corporate structures was really starting to consider that issue of well, Bitcoin and Ethereum can be considered as DAOs, and we're seeing a number of other DAOs be launched in recent years. So how are we going to be thinking about these systems in 10 years' time once they've had more time to set up and establish themselves? So yeah, I think that's really what I'm interested to see, Chloe, is how we can, how different regulators, for example, AUSTRAC in the example of AML/CTF, ASIC in the example of corporations law, will start to turn its mind to decentralized system, which ultimately sit at the base of this ecosystem.
Thanks, Jack. One thing that I like to think about in terms of where we'll be in the future is also how can the types of innovations that you're working on be a part of the solution? And you mentioned around KYC AML just now. I know one piece of work that you did recently was on zero knowledge KYC. Can you share some ideas of how do you think that the technology could actually be used to support regulation?
Yeah, I mentioned MiCA and I mentioned the USEL and I mentioned Australia's work, but the one thing I didn't mention was FATF's report. And what was interesting about FATF's report is that it did explicitly call out decentralized systems. And I think there are good reasons for that, right? We've seen the ANZ announcement today in terms of ANZ looking at using a CBDC. We've seen Fireblocks and its development in the US late last year in terms of starting to distribute some of these smart contract-based applications to institutional players in the ecosystem. And we're seeing a number of business models start to emerge around bringing real assets into these ecosystems. And each of these problems raises some really interesting questions around, well, how do you bring KYC assets onto public blockchains, which since Bitcoin and Ethereum have launched, have largely been non-KYC environments. And so mainly for those reasons, we assembled a team to write the ZK KYC paper with authors with experience in banks in both Australia and the US, so at different stages of the public blockchain versus KYC problem. And what ZK KYC tries to do is mix the two environments. Say, is there a level of identification on public blockchains that users of public blockchains can be happy with from a privacy perspective, and that regulators can be happy with from a, you've done something bad, so we're going to identify you perspective. I think one of the things that maybe doesn't get enough conversation, I know Chainalysis has done some really interesting work around this, is ultimately when you're dealing with public blockchains, the transaction data is all public. We're going to see different ways of observation and ultimately enforcement in terms of anything that anyone does in this environment, say for a few chains where we have zero knowledge proofs already implemented, is out in the open and is able to be analysed. So I think applying that thinking to AML-CTF, which is obviously about data identification and data sharing, we were pretty keen to get a solution out there that can be used to help projects that are actively working on this problem now.
Brinda, I'd like to get your views on Jack's comments just now. For a business like Banxa, how do you think about, KYC on one hand and privacy on the other?
Yeah, that's a very interesting question. So yeah, I really think that we definitely need some clear clarification on KYC and AML reporting that preserves privacy. Right now, we don't have that. To Jack's point, I think we need a combination of a tech solution and that leverages the blockchain's availability. And we need to think of creative ways. So right now, how it happens with fiat to crypto on-ramps and off-ramps is we're using just the banking ways. Get as much information PI as you can, and it doesn't really leverage the features of this of digital assets. So I think we need to rethink. It requires some rethinking, and I'm really excited about the ZK KYC.
I want to bring the discussion back to lessons learned, because we've mentioned a few times in this conversation about looking internationally, but there are lessons that we can learn from our own domestic experience as well. Michele, can you talk us through your view on this? Because I know you've looked at systems for consumer credit and complaints handling. What lessons can we learn from our own experience in Australia?
Thanks, Chloe. I think people often like to look for a shiny new piece of legislation. It has the glitter that it is new. You can design it the way you want it to be, and you're not sort of constrained by the past. But we've often found that when you start bringing out new regimes, which sort of sit adjacent to like Financial Services and the Corporations Act, you end up starting to have regimes that look very similar to what they were. So with consumer credit, I think from memory, the banks wanted it to be a separate regime, and it's ended up looking very, very similar to financial services. There's a few differences around responsible lending and things for brokers. And I think if we've got strong building blocks and there's things that we can do to exclude things, I think it's really important to look at those building blocks. I also think we have to look at the intersectionality of how these industries are going to interact over time. And particularly for someone like Guy, who's going to be both an issuer and a secondary service provider, the complications that may arise by having two separate licensing regimes and what that might actually mean for the distribution of product. I don't think we want to get in a situation where people are intentionally designing product to avoid falling under financial services and just falling under the crypto regime because they can't distribute it because exchanges won't readily, not maybe some, but not all exchanges will hold both. I think we really need to think about intersectionality and how that's going to play out, and just making sure if we do need to accommodate things, we can do it in a way that makes sense for the risk related to the industry. it's really interesting. I think Treasury's consultations paper talks about the harm being very different with crypto assets, but we're ending up with very similar protections that you would see under financial services around honestly, efficient, fairly, prudential requirements. They're very similar. So we are creating a replicant regime, and I'm thinking we really should look to the future and think about how it all comes together and becomes like this multi-directional industry that intersects and gives people the flexibility to design these products and solutions which make sense for what they are, rather than to operate around regulatory regimes. I think that is really a very important thing. And we don't even know some of the things that are going to be created yet, which I think is some of the complexity with reg reform. But we should really strive to contemplate that as much as possible up front.
Michele, I can see that what you're saying is really resonating. There's a lot of nods around the room. And the last three speakers that we've heard from have all communicated a theme there around being forward-looking and wanting to future-proof a system. And, you know, certainly in my research of looking at other regimes, it's a very common mistake that's happened over and over again over the last years of locking in something that works for that day. But we all know how quickly this industry moves. It's very, very hard to build longevity in when you're forcing a regime that inherently does make assumptions about how the industry will look in the future. Just on that point about intersectionality, it says in the consultation paper that the government has a clear aim to avoid an outcome where a business would have to apply for loads of different licenses. And you mentioned Guy's business model, and he's already working with 4 different regulators. But Mark, you know, do you see with your clients that you have, are they going to be able to just apply for one license based on your understanding of the Casper proposal?
Not in the current form. I really agree with what Michele said about the risks that. So, for example, it doesn't touch on part of the reason why I think they're creating a different regime as to the other option. Well, the recommended option is a Casper license of an AFSL, because I don't want to answer the question about what is a financial product. It just says it's all uncertain. But the risk is that depending on the nature of the token that might be on their market or that they're holding custody for, it may be a financial product and therefore triggers the other regime. So there's creating some certainty, but also leaving uncertainty there. But also, so I think one of the things I really need to address is, like they do in some of the architecture of the AFSL regime and the ACL regime, that if it's this, then it's not that. So if it is a crypto asset, then it's not a derivative, it's not a security for the financial services regime, because there's still a whole lot of uncertainty. And that can be a feature of like a safe harbor. So for the time being, it's not going to be regulated as this. And so that's really important to deal with those crossover elements. And look, this is a high-level consultation paper, so I'm not suggesting it's being forgotten, but it does really need to be picked up. One of the really interesting things that's not in the paper is, as Guy picked up, the issue with professional indemnity insurance. I mean, we all know in this industry that is tough, so tough that it's impossible in many cases. There is no mention of a requirement of professional indemnity insurance for a Casper license. So it's a really critical exclusion, positive exclusion, if I can call it that. And so, but yes, so that intersection between regimes is really important to pick up and create some certainty. I think some sort of safe harbor exception, temporary exception, would be really valuable to deliver the purpose of these reforms, and that is create some certainty for businesses to build.
That's a good point, Mark, and absolutely the insurance question is one that's come up with a number of my clients, and it's been a real concern for them to have that piece missing from the compliance stack. Doesn't only affect their own risk and operations, but also other entities in the financial space that they would want to have partnerships or contracts with. So it is a real concern in Australia. I want to throw back to Chris. You've got a real bird's eye view across this space. You know, what's your reaction to the consultation paper? I've heard that you're also in Dubai at the moment, so I don't know if you've had a chance to look at it yet.
No, I haven't, but I can give an opinion on something I haven't read. No, I think the overarching thing that my concern is that a lot of these discussions are based on a snapshot of the industry as they are and a particular side of the industry as it is. Fundamentally, the reason that we're all interested in this technology is because of its censorship resistance, its inherent global nature, and its open access to anyone, anywhere. So I think the Australian government needs to understand, and frankly, the industry here also needs to understand that we can design a regime in Australia, but if that regime is either too onerous or doesn't recognize some of the fundamental limitations of regulation in the space, then it's certainly not going to achieve its goals, and it may make the situation harder for Australian entities to operate in. And a really simple example of that, and not picking on any particular type of project, a really simple example is if we say that a DeFi project of some description requires a license. Well, what happens when someone decides that the conditions of that license have been breached, but it's still, the DeFi project itself is still on the blockchain and can be accessed by anyone? We just don't in this space have many of the simple tools of compliance. We don't have many of the legal enforcement tools that would allow us to impose a traditional looking regulatory regime. So I think we, not to be negative, but I think we have to recognize that this is harder than perhaps the government fully understands, because it's such a fundamentally different technology, such a fundamentally different economic institution.
Thank you, Chris. Mark mentioned before about the uncertainty with the election coming up. Chris, how do we begin to work through, because, some of the things that we've talked about today about, the need to educate both sides. And this has been, such a big part of the work that so many of us have been trying to do for years now. What's the next step that we should take?
So I think Jack's zero knowledge KYC is actually a really good example of the sort of things that we as an industry need to be building out and implementing. Ways that we can achieve the stated intentions of legislation in a way that actually suits not just the technicalities of these projects, but the norms as well. The challenge that we're going to have is, of course, taking those modern ways of achieving those goals and convincing regulators at a ground floor level that they do achieve those goals and that they should be seen as compliant to the intention of the legislation. Now, part of what we're going to do is always going to be at the parliamentary level, but I think convincing regulators that KYC that ZK KYC is effective, that's a ground floor thing. And so I think we need to engage. Obviously, it's great to have parliamentary inquiries, but we've got to do really ground floor engaging with the regulators and individuals within the regulatory agencies themselves.
That's a good point, and I really commend Jack and his co-authors for the work they did on that piece. And it's really important to think about the different ways that we can communicate and educate each other and all the different stakeholders in the ecosystem as we move to progress towards this ultimate aim of having Australia be a competitive and thriving jurisdiction that draws talent in. And I know many of us have been quite sad to see the departure of a number of talented teams and projects. We've missed out on a number of opportunities, but if we can get this right, it really opens the floodgates to us achieving that critical mass that then grows and grows. I want to ask you, Courtney, because you've done so much in your career building those relationships, to get that educational piece right. What advice would you have, where Australia's at today?
Look, I would say, and the PI piece, I don't know if you saw my head viciously nodding there. It's about, they need to have an incremental approach, because the thing is, PI underwriters don't want to engage with anyone that's unregulated, but you have to be regulated first. But if PI is contingent on regulation, it's just a chicken and egg scenario. So I'd say we just need to continue the engagement with all broader stakeholders as well, and make sure that if anything we've learnt out of previous regime rollouts, and of course using case data like the industry participants that have left, that we've got to get this right. All of us agree that it's going to be incremental, and it's a mammoth task. There's no getting around that, but it's going to be remiss of us to lose out on the opportunity that's available. So I think that the best thing we can do is buck the trends and learn from what we've done previously, speaking to Guy's experience, speaking to the lawyers no doubt have an inundation of these cases previously, that we've used that as a reason why we're going to do this differently this time, and make sure that we slowly but surely build out something which embraces the opportunity we've got here, but also does what we need to do at the end of the day, which is provide consumer confidence by having a regulatory regime in existence in the first place.
Absolutely. There's been a lot of discussion this week about, consumer protection on one hand and supporting innovation on the other. And they're not at odds with each other. They're very much linked. They're positive reinforcing effect on each other. So, there really is an opportunity here. Not everything in designing this regime has to be framed as a trade-off or thought of in that way. And I think the conversation we've had about the zero knowledge KYC is such a good example of that. You can get better outcomes on both sides of privacy and AML. Jamie, FTX, how are you going to contribute to this? You're in week 1 of Australian operations. What can an organisation like yours do? You're a startup, you are well resourced, but you're still a startup, you're very busy, you have a lot of priorities, but how can you draw on your experiences in your own personal, professional lives that you've had working in this space for a number of years, but also, FTX as an organisation, what can FTX bring to this discussion?
Yeah, and I think maybe a bit more of a positive approach to this is, of all the countries we've actually been licensing and regulated in, Australia has been one of the more smoother countries, which just suggests how complicated this space is, right? And I don't envy the hard task that Treasury has ahead of them. It's a very difficult problem. But I mean, I guess, Kathy was talking about how in the last session, how education is very important, right? How, we need to try and educate consumers, educate, the retail market. But at the same time, I think, the policymakers and the regulators, there's a part of an education piece there as well, right? So it's about ensuring they have an open mind, approaching the industry, asking questions, there's a whole panel here of experts, and Chloe, I think you're very generous to dub me as an expert, but I'm sure we'd be more than happy to sit down with these people and sort of work through some of the hard problems they're going to face as they go through the consultation process. So look, I'm more than happy to talk to anyone in ASIC, anyone in Treasury, and I'm sure anyone in this room would be as well.
That is such a great note for us to end on. And Jamie, you've always been far too humble. You need to stop that. Look, I want to thank everyone for joining us in this roundtable today. This clearly could have been a conversation that went on for quite a long time, but it will continue on because, I think the key theme or the key takeaway for me of what we've all talked about today is that we need to be working at all the different layers of policy discourse. There's a public communication, a regulatory communication, and industry communication. We need to be proposing solutions, and really keeping the discourse quite open and active so that we can keep the momentum that we've generated over the last 12 months. Everyone has worked so hard to get us to where we are. And as much as we do have the uncertainty of the election, as has been mentioned today, we really have come quite a long way in Australia. That's thanks to the hard work of everybody wanting to understand the space in Canberra and, in our startups, our universities, in our law firms, everybody across the country. So, I want to thank everybody for sharing some real insights. This is definitely going to be one of those sessions that will need to be rewatched when it eventually gets uploaded onto YouTube later. But, I think as Jamie said, everyone here clearly, wants to make that contribution. So, we're all available to be contacted, and I'll hand back over to the event organisers so we can hear the next session.